Ether surges toward $3,000 on tentative U.S China trade pact and soft U.S CPI report. Ether's 5.6% rally to a 10-day high followed soft May CPI and a draft U.S China trade truce, intensifying already brisk institutional demand. Ether, ETH $2, 770.83 drifted around $2,770 for most of Tuesday until roughly 8 p.m. Eastern Time, when officials said negotiators in London had forged a draft U.S China trade framework. The outline, till awaiting presidential approval, would see Beijing resume rare earth exports, while Washington eases curbs on advanced technology sales. At 8:04 a.m. Eastern Time on Wednesday, former U.S. President Donald Trump posted on Truth Social that our deal with China is done, pending his and President Xi's formal approval. Trump claimed the accord would leave U.S. tariffs on Chinese imports effectively at 55% versus Beijing's 10%, promised that China would front-load supplies of magnets and other rare earth materials, and said Washington would uphold concessions such as continued access for Chinese students to American universities, describing the bilateral relationship as excellent. Hopes for a thaw in the multi-year tariff dispute sparked an initial risk-on bid. Global equity futures firmed, Bitcoin ticked higher and Ether pushed to about $2,780 on expanding spot turnover. Risk appetite intensified 11 hours later, around 8:30 a.m. Eastern Time on Wednesday, after the U.S. Labor Department reported that May headline and core CPI each rose just 0.1% month-on-month, undercutting economists' 0.2% forecasts. The cooler print fueled expectations the Federal Reserve could trim rates later this year, driving Treasury yields and the dollar lower while extending gains in equities. Against that macro backdrop, Ether vaulted from the upper $2,780s to an intraday high of $2,873.46, with spot volume swelling to roughly 527,000 coins, $1.47 billion. According to CoinDesk Research's technical analysis model, structural tailwinds remain strong. Staked ETH climbed to a record 34.65 million tokens, almost equals 28.7% of supply. Exchange-traded funds logged a 16-day inflow streak near $900 million, and futures open interest printed a fresh high above $21.7 billion, all underscoring steady institutional engagement. BlackRock's reported $500 million accumulation over the past 10 days exemplifies that theme. Traders now look for a decisive close above $2,900 to open a potential run at the psychological $3,000 mark, while guarding against a pullback toward the newly established $2,750 to $2,760 support band. Technical analysis highlights. Disclaimer. Parts of this article were generated with the assistance from AI tools and reviewed by our editorial team to ensure accuracy and adherence to our standards. For more information, see CoinDesk's full AI policy. Siamak Masnavi is a researcher specializing in blockchain technology, cryptocurrency regulations, and macroeconomic trends shaping the crypto market. He holds a PhD in computer science from the University of London and began his career in software development, including 4 years in the banking industry in the city of London and Zurich. In April 2018, Siamak transitioned to writing about cryptocurrency news, focusing on journalism until January 2025. When he shifted exclusively to research on the aforementioned topics. CoinDesk Analytics is CoinDesk's AI-powered tool that, with the help of human reporters, generates market data analysis, price movement reports, and financial content focused on cryptocurrency and blockchain markets. All content produced by CoinDesk Analytics undergoes human editing by CoinDesk's editorial team before publication. The tool synthesizes market data and information from CoinDesk data and other sources to create timely market reports, with all external sources clearly attributed within each article. CoinDesk Analytics operates under CoinDesk's AI content guidelines, which prioritize accuracy, transparency, and editorial oversight. Learn more about CoinDesk's approach to AI-generated content in our AI policy.